Hi everyone. Hope you have a wonderful Sunday morning, that you have recovered well from your Saturday nights, and you're all probably been watching the news, wondering what's happening, especially the last week. And a lot of you have many questions. You've been asking me on DMs, and you've been chasing Dhana on Instagram. Ask these questions. So I thought we'll get some of them answered now. So what is the questions which are pressing our viewers' minds, Dhana?
Overall week updates, sir. All this impact, they are asking about why this market crash. So I have some questions and they have some questions mingled this, and then I am asking to you. Iran-Israel war impact on the Indian stock market crash. What is that? And then in this week only 13 lakh crore wiped out. Total 5-day sessions. And FIIs in the Indian market, they are redirecting their inflows into the China. So they are reducing their volume in our India. If you are coming with the numbers, on Thursday trading session only 15 lakh crores have been wiped out from the FIIs only. Overall this week 30,000 crores have been wiped out by the FIIs. So FII outflows are very strong. So they are directing into the China. This week market crash also come by this impact on the SEBI new regulatory on the F1 session. That also might be an impact on to the stock market crash. And then the rise in the global crude oil prices. So that also impact. And the final one is Israel-Iran impact, geopolitical tension. That is the overall impact that has been created. And another last question, sir. This is the important question. HSBC Securities and ICICI Prudential, those securities, they are warned this is correction, this is not a crash. Warning for you, 20 more percentage fall, it's near. So what is this?
Yeah, this is like, you know what? The market players are like the professor in the class, writing on the chalkboard. Some student in the market has thrown a chalk piece and hit the professor on the head. Professor is turning around looking at the class saying, who did it? So this is how you're asking me. Is it because of Iran, Israel? Is it because of SEBI? Is it because of this? Is it because of that? Is it because of Fed? Why? First of all, if you are a value investor, right, don't worry. If you take any market, right, any share and push it over 10-year spread, it is pretty much a straight line. It depends on the inclination. Some grow at 10%, 11%, 6%. Depends on shares and what business they're into. But you can compound. So don't worry about it. People who should be worried about are people who are trying to do these future options, who call day trading. Those guys will be worried because they can't understand this. Most of those questions are coming from these guys. If you're a true value investor, it's an opportunity.
Then right? The last question will appear, sir. 20% correction will be there.
Yes. But then again, who's an astrologer? Right? Everyone can make. Okay. Looking back, you can say, today IPL match, let's say, is going on between CSK and Mumbai Indians. You go on saying Mumbai Indians will lose, Mumbai Indians will lose. If Mumbai Indians does lose badly, then everyone think you're a prophet. If Mumbai Indians thrashes CSK, they'll all think you're an idiot. You're just a psycho fan. Right? So that's the way this is. No one can predict what is going to happen. Because Netanyahu himself doesn't know tomorrow morning what he plans to do. Because who is pulling his strings, nobody knows. Right? All leaders are not really leaders. They are only people in the front. There are a whole bunch of people standing behind who decide, who influence the leader into going in certain directions. Immediately conspiracy theories will come out saying there's a secret cabal controlling the world. I'm not saying that. We are all influenced by everybody around us. So the same way, we do not know what Iran will do, how much they're willing to push. We do not know how much Israel is willing to push. So these kind of draw a forecast based on this is difficult. But what I'll tell you should take from this 20% news is good. That you heard this news, I'm happy you heard it. Now let's take your portfolio. Let's say your 100 rupees becomes 80 rupees tomorrow morning, Monday morning, tonight. Israel decides to act on Iran. Morning you wake up, market loses its bottom. Right, pants fall off. It's down. Then the Nifty goes down from 25, it drops down to 21 within minutes. We have circuit breakers like what happened during the pandemic in the market. One circuit breaker, 15 minutes cool off, opened again, tabal it fell. Again, second circuit breaker, cooled off. Then third circuit breaker, half an hour, some 1 hour cool off. Then again it fell. Then they said no trading for the day. Market is closed. We'll see you tomorrow. That happened. Okay, so let's say the Monday morning that happens, and you see your 100 rupees becoming 80 rupees, 70 rupees within a matter of hours. Right? On Tuesday morning when they open the market, would you say, no, Baba, let me take my 70 rupees out? There's two people. One, I know what you Gen Zs will do. Will say, I'll take out my 70 rupees. The market will go on to 40 rupees. I'll re-enter the market at 40 rupees.
This is the best strategy.
Correct. I'm not making a loss, sir. Sir, I'm pulling it out now. It'll go down further. I will buy them. A lot of people do not realize. During that pandemic crash like that, the market immediately bounced back within 2 days. If you took the chart and pull out the chart, people who thought this pandemic would be like at the bottom most for a long period of time, it did not stay. Within few weeks, it recovered. Now, it didn't go back to all previous highs, but it recovered substantially. People who tried to do bottom fishing were left at the bottom. Right. So my advice is that is one extreme. The other extreme are the nervous Joes like our perfecto who will feel like, oh my God, I cannot take this pain. I will pull out everything. I don't want to ever go into the market. This is very scary. So they'll pull out and they'll stand in the sidelines. So this is a major reaction. Very few will be like, okay, let's see how much more pocket change I have on my table. I'll buy some more. Forget that 100 that became 80. That will recover, I know. But let's see what else opportunities are there and let me pick those up. Very few will be thinking of that mindset. And that is the mindset you should cultivate. And that is the mindset you need. Because Manappuram, if you take, for example, it has seen already 17-18% correction. But if you see over the year, it's still up. So that means there's still a lot of room in Manappuram for further correction. And the reasons for those corrections, which maybe we understand, maybe we don't understand. But if you know Manappuram, like we discussed in the previous video yesterday, and you believe in it, and it makes sense to you, and you're in it for the long term, then you should see opportunities. From 189, it might go to 140, it might even go to 100. Because some companies, microfinance, like Anand was saying, has corrected 50%. So if 200, 50% is where? 100. Possible. Maybe it will happen in 3 weeks' time, it might happen in 3 hours' time, it might happen in 3 months' time. I don't know. But if it happens, it happens. And it might take 3 years from 100 to go back to 200. I don't mind. But that is a certain mindset to develop because you're investing in the business. It's like someone is selling a business like Manappuram for cheap. So you're buying the business. You're not buying the share. You're not investing. You are buying the business. Someone is selling their business for cheap. Like your biryani kada. Right? You find instead of spending 2.5 lakhs and starting new biryani kada, next door to your house, which is running very well, the biryani shop you're seeing every day, based on that only you wanted to put your own biryani kada. You felt inspired to do biryani kada because of the shop you saw next door. Suddenly you find that guy is selling it for half the price because he has reasons to exit. He needs to go back to his hometown. He got married. He has to settle down. He has to take over his father's fishery business in Namakkal. Okay, wherever. So he is saying, Dhana, you're interested. You've been looking at my shop. If you want, I'll sell it at 50% discount.
Definitely, I will go, sir.
Correct. We'll be like, he's doing great business. He wants to cash out. He needs to leave tomorrow. Okay, here, take. That's what is the way you should look at Manappuram. That is the way you should look at Natco.
Tata Motors, sir.
Tata Motors, all of them. But the problem is, you guys and Gen Z are like, no. I want to buy this shop today and now I bought 50% discount. No? I'll find some other joker to sell it for 25% profit and exit and take that money and open my own biryani store. So anyone who look at it will think, oh my God, this guy's crazy. He wants to do a biryani store. He's bought a fabulous biryani store at discount, but he wants to sell that at a profit so he can go start a new biryani store all by himself. They look at you and say, but Dhana, why are you doing that? This store is next to your house. You're happy. Everything is good. But your brain doesn't think like that. So that is why you have to develop the mindset. Okay, I'm happy you're reading Psychology of Money. But you not only read it, you need to apply it. Yes. It has to be a practice. Right. So all this news is great. This is all good news for a value investor. Okay.
We need to see like this.
Correct. FIS want to leave? Okay, very good, leave. I'm in India, I'm not going anywhere. Right? We're not so rich, we're going to be moving to Dubai. We're not high net worth individuals like other people who do videos saying high net worth individuals are leaving India. Okay, you leave, Baba. I'm low net worth individual, I'll stay. You don't want that biryani store? Okay, I'll buy.
That's it.
There's enough Indians who eat biryani from me. I don't need to make 10 crores. If I make 1 crore, enough, happy. So that is the mindset you should have. So if FIIs leave, let them leave, right? You see those opportunities and you keep buying. If SEBI is making rules harder for F&O, good. That means less gambling in the market. Less of you Gen Z is going crazy. Okay, those of you who want to borrow and still go crazy, that's your choice. I advise you against it. But if you want to do, right? But that is also good news only, right? And if China, they're gambling in China, that's the FIA's problem. Because Chinese government has only said stimulus plan. They have not really done anything as yet. They have announced ideas. So let them do. If they want to go, let them go. We're not going to go invest in China. So no problem. And if crude oil prices go up, very good. You and me anyway only use public transport. So we're okay. So companies which are affected by crude oil, those might correct. And if it comes into value proposition, we'll buy them. Because people still need to paint their house. Right? Correct. People still need to put fuel in car. People still like buying plastic. So those companies suddenly become cheap for a while because of earnings worries. We'll pick them up.
Oh.
Okay, so that's the way you need to look at it. And as far as Israel and Iran is concerned, I cannot predict, right? A lot of people are saying this HP Securities and ICI Prudential is the extreme warning. If it becomes nuclear, if Israel attacks Iran's nuclear sites, or they attack the petrol sites and Iran decides to retaliate by dropping something on Israel, extreme, right? Then everyone will get spooked. Everybody will retreat in great hurry. If that happens, yes, market can go by 20%, 25%. Who knows? That is an extreme. And market always reacts in mania. Mania means it will go to one extreme. Oh, everything is good. Everything is fabulous. What are you saying? No matter what. Russia, Ukraine, everything is factored in. They'll talk as if like bear market will never happen. That is one extreme. Otherwise, this extreme. Everything is gone to hell. Be careful. Sell everything. Buy gold. Only buy gold. Gold is only safety.
Correct.
Either this extreme or this extreme. As a value investor, we try and stay in the middle. Okay.
That is our conclusion.
Yes. So anyway, I hope this video was informative and entertaining. Don't worry, there might be opportunities again this week. I can't predict it, Dhana can't predict it. If you see those opportunities, stay in Tiffin Coffee ranges, please, because we are not entered any kind of major correction where you need to break your bank or break your war chest, as some of you like calling it. We are nowhere near that. We are just seeing small fluctuations in the market, volatility in the market, as I say, as the market is trying to see what is happening. Some of it is greed, some of it is fear. It is very hard to say what is causing the market to move. What you should be focused on is your list of stocks which you are interested in, and if you see value propositions in that and you're ready to risk some of the Tiffin Coffee money, please look at Tiffin Coffee range of investing and keep going. And maybe next week we will have some further market news like this on a Sunday morning to talk to you guys about as you're sipping your coffee and scratching your heads. Or we might be looking at another continuation of the bull run and we're like, everything's back to normal again, I guess. Either way, it works for us. Take care out there. Have a lovely week ahead. Anything else you want to add, Dhana?
No, sir.
Okay. Do like this video. Do share it with your friends and family who might find this content interesting. Reach out to Dhana on Instagram, his handle where he shared with you, and ask him your questions and we'll try to get them answered here. Other than that, nothing else further to say. See you next weekend. Bye.